Welcome, welcome, one and all. We are super excited to either welcome you back from our 2025 Pin Insights Live series or welcome you for the very first time. We're going to get things kicked off in just a moment. We're going to let people join us into the room. And in the meantime, I just going to briefly introduce myself. My name is Yolanta Smolsky. I'm a co-founder of the Pet Industry Network, which is the organization that has brought you here today. And we will share a little bit more about it, especially if this is the first time that you're meeting us. But I'm going to turn things over to my fellow co-founder, Matt Aldrich.
Hey everybody, good to see people starting to stream in a little bit. I am seeing an issue though. The biggest problem I'm seeing is that only Sally has joined us with her video on. Sally, if I had like some bonus points or like a bag of dog treats, I would be sending it to you right now. Starting to see some other people on their camera. Hello Anne, hello Melanie, hello Stout. Can we get some more people on their cameras? There we go. Lara. Still waiting on a few more, guys. We would love to just see your happy, smiling faces now that it is 2026. It is our first webinar of the year. And we are super excited to be bringing this to you today.
Fantastic. I see a lot of people playing full out. We love that. And we're going to continue encouraging you throughout today's session. We want to make it as super interactive as possible. So we encourage you to chat with us in the chat as well. So why don't we kick things off to warm everybody's fingers? Why don't you introduce yourself, your name, your business, and where you're tuning in from, and maybe what kind of business you have if it's not immediately obvious from the name of the business. So, and no worries if you can't join us on camera, Diane, we totally understand. Some of you who we've seen over the last year will join us out of your business. You're going to be grooming dogs on the side or taking customers, ringing them up. So it's, or maybe, packing some packages to mail out. Totally fine. So why don't we have some intros in the chat? I'm going to drop mine as well.
We are seeing a few in there, and Elsie just came on camera. I saw her Zoom background was actually from the Pin Growth Summit. So kudos to you, Elsie. Totally get it if you can't come onto camera right now, but guys, please use the chat, introduce yourselves a little bit. We want to know who we're sharing the room with. And yeah, snowy tundra from northern Michigan, Sally. I know exactly what that's like. It is freezing today. It is absolutely frigid.
And more frigid temperatures to come.
Yeah, true. It is actually going to get colder. So that is fantastic for us people in the Midwest and the Northeast.
All right, who else do we have in the room?
More people in the chat.
Don't be shy, guys. Let us know a little bit about yourself so that we know who's in the room, and also we can tailor the conversation a little bit based on what kind of businesses we know are in the room as well. So let's see what we've got. We've got EJ, who's also from Ann Arbor. Look at that, your neighbor, Matt, from Wild Fox Events and Design. That's awesome. And Melanie from Perfect Paws Pet Supplies from Canada. We love our Canadians. We've got Blanca from Per Fashion. I love that name. I upcycled cat accessories from San Diego. I am so jealous. I wish I was in San Diego right now. And then let's see. We've got Leslie from Bonjour Jax. Yes. From Tyler, Texas. Fantastic. Welcome. Diane is tuning in from Mary Poppins Pet Nanny in Gainesville, Georgia. And Brenda from Furry Belly's Pet Boutique Driggs, Idaho. And we've got Anne Mortog from Annie's Professional Pet Services. Awesome. And Happy Tails Doggy Daycare from Massachusetts. And Laura from Stable Hands Pet Care from Virginia Beach. Beautiful. And Michelle, owner of Bark Avenue Day Camp in Illinois. This is great. This is awesome networking as well, guys. We love for you to meet each other because you're going to be seeing a lot of each other, hopefully, not just within this Zoom room or future Zoom rooms with the Pet Industry Network, but anytime you attend a conference or a pet trade show, we love to help you foster those connections. So kudos, good job there. We love to see that. All right, Matt, shall we bring up the slides and get this party started?
I definitely think we should. Guys, Once again, just want to express some appreciation for everybody that is here today. Everybody's taking some time out of working in their business to work on their business. I am delighted to be bringing my friend Virginia to the stage in just a few minutes here, but you guys are here for the Cash Flow Reset for 2026. Today's webinar is hosted by the Pet Industry Network. The Pet Industry Network, for those of you that don't know, is a collaborative group of trusted, experienced experts helping pet businesses grow smarter across every area of their business. That might be operations and hiring to branding, marketing, and beyond. So whether you have a brand, maybe you run a retail store, or you're a service provider like a sitter or walker or groomer, or maybe you're a manufacturer, our goal is to connect to you with the people and strategies that actually move the needle in your business. So if you're not already familiar with PIN or the Pet Industry Network, definitely check us out. We will drop a link in the chat. And it is my absolute pleasure to introduce our guest today. Virginia Gearhart is the founder of Gearhart Bookkeeping. She helps pet business owners take the stress out of their finances, which I'm sure everybody here is at least a little bit familiar with, right? She helps them improve cash flow, understand what their numbers are really telling them so that they can make better decisions and protect their profits. Virginia, I'd love for you to introduce yourself a moment here before we get into everything.
Yeah, definitely. So as Matt said, I am Virginia, the owner of Gearhart Bookkeeping. So not only do we help with bookkeeping and getting everything organized for tax season, but we also help with actually understanding your numbers, helping you use those to make decisions for your business. But yeah, thank you guys for having me. I'm super excited to be here and talk more about making the money side just at least a little bit less stressful.
With tax season coming up, that is going to be worth its weight in gold, I'm sure.
Mm-hmm.
And before we jump into that live discussion, we actually want to take a quick temperature around the room. So this is really easy to engage. All you need to do, we warmed up those fingers before, all you need to do is drop in the chat. So the first question is, on a scale of 1 to 5, how confident do you feel about your cash flow heading into 2026? So on a scale of 1 to 5, 1 being on the low end, feeling uncertain, 3 is pretty much in the middle, somewhat confident, and then 5, you're feeling absolutely great. You're just here to learn more, right? So let's see how the room is doing and where everybody falls on the scale. I see a bunch of 2s, a couple of 3s. Okay. Do we have anybody else who hasn't been polled yet? We've got a 4 in the room. Great, great. 3 or 4. Okay, good. So the reason we ask this question is because we want to see where the mix skews between. That way we can, like I mentioned earlier, tailor the conversation. And wherever you landed, you're in great company, because by the end of this hour, we're hoping that a lot of you are going to be feeling even more confident about your cash flow in 2026. So moving on to the next one. Now, tell us the truth. When was the last time you reviewed your cash flow intentionally? Not just a brief scan of the numbers, but like really looked at it from a deep lens, okay? Put it in the chat, either a 1, 2, or 3. So 1 would be this month, great. 2 would be in the last 3 months, not too shabby. And then 3 would be sometime last year. I don't regularly review it, and that's why we ask you, just tell us the truth, because it's okay. Because no matter when was the last time you reviewed your cash flow intentionally, when is the second best time to review it? Now. And that's what we're going to do today. So let's take a quick look at the room to see what we had. Okay, a couple of 2s and 3s, and we did have a 1. Okay, that is totally fine. Like I said, you can count today. We're doing it here in real time. All right? Awesome. And then the last question we want to ask before we dive into it, if you could finish this sentence in the chat, all right? If revenue stayed the same for the next 90 days, right? Through the end of Q1, business is going. Finish the sentence and use whatever word best resonates with you. If things in terms of your revenue stay exactly on the track that they are right now, or maybe they are repeating last year's trends, right? If you could predict that it would at least meet last year's trends, or maybe it's not going to do as well as it did last year, right? And you're a little bit concerned about how is your business going? Fill in the blanks. Okay. So what do we have in the chat? We've got, okay, fine, well, but want more. I love that, Sally. Under my goals, Sure, that is a very honest assessment. Not good, Leslie. Totally get it. And we're here to help you change that. By spending, like Matt mentioned when we opened, by spending this time focusing on your business and really taking a critical look at your cash flow, you are already making steps and headway to turn this around, right? So you're in the right place at the right time. All right, so now that we've done our quick self-evaluation and everybody understands generally where they are, where they need to improve, it's time to kick off today's discussion. And just for housekeeping, as we go through it, again, I mentioned I want you to stay active in the chat. So any questions that come up throughout our discussion, please go ahead, label it with a Q. That way it's going to be super easy for us to find it inside the chat and we can leave time at the end to answer it. All right, so I am going to kick us off with the discussion. Virginia, the floor is now finally yours. I'm so excited to bring you on. And the first question that has been top of mind, right, for preparing for this session was, when looking at pet businesses that are busy, but cash still feels tight, where does money most often get lost? And what are the early signs that everyone in this room could be looking for?
Yeah, definitely. So when I just want to say this is something that is super common, first of all. So, the businesses are busy, calendar is full, team is working hard, and, but cash still feels tighter than you think it should be. So really common leaks that could be causing that is number one, labor. As your business grows, schedules can change. You could need increased coverage, maybe even some overtime starts coming into play. And now, before you know it, that labor's raising higher than your revenue. Next one is pricing. So pricing could stay the same, but maybe payroll, rent, insurance, supplies, all of that is rising. So it's slowly eating into your profits. And then another sneaky one is recurring expenses. So maybe you signed up for a software a while ago, or maybe you upgraded a software a while ago, or a service, or just any sort of membership that you're not using anymore and you just forgot to cancel it. And you can kind of look at your bank statement and see what you're spending your money on and make sure you're still using every single one of those things today. And that's not a purchase you made a couple years ago that you don't need anymore. And then finally, inventory. So you may be over ordering, or maybe some things are slow moving, and that's keeping cash tied up on the shelves. And early warning signs for that is that maybe you're needing to rely on credit cards for larger or unexpected purchases. Maybe you're not giving yourself a consistent paycheck. Maybe you're hesitating before making big decisions because you're not sure if your business can support it. Or you're regularly checking your bank balance to make sure the money's still there. But just keep in mind, all of these are really common, especially as your business grows. And when this happens, the answer usually isn't to hustle harder. We want to slow down, see where the money's slipping away before we try to add more revenue on top of it, because it could make the leak even bigger as your revenue grows bigger.
Absolutely. And we actually have a few retailers in the room. So I'm wondering, for those who are retailers in the chat, I think inventory probably hits home. If you can drop it in the chat, if you have concerns about your inventory management happening right now, especially post the holiday rush, and that putting a strain, how the speed at which it's moving, putting a strain on your finances. And also, what you touched on, instead of hustling harder, right? Mm-hmm. We just got off such a massive hustle from the holiday rush. And, a lot of pet businesses, come to January and it's like, what now, right? What's next? So, thinking about that, with the holiday rush being over, what steps can business owners start taking right now to make cash flow feel more predictable this quarter? And especially set a stronger precedent for even next year, right? Because what you practice now, you're going to see results. You're going to build that muscle of seeing those results the next time, even when income isn't consistent right now.
Yeah. So one thing I like to remind people is that seasonality is normal, especially in the pet industry. But what matters most is, how we use these slower periods to like make us feel more financially stable. So the good news is that there are a few ways that we can soften the impact, and that normally comes down to planning. So one big thing we can do to plan is to get ahead of the slower seasons. So what I like to do when I'm building a budget for a client is I will look at usually 2 to 3 years of their revenue by month. Every single month I'm looking for patterns, which months dipped, which ones spiked. Most of the time, it's the same months every year or right around the same time every year. And some of you probably know what months those are because you can feel it. But if you look, it might be more eye-opening. Maybe it was a different month than you thought. And then once you see those slower months, you don't have to sit back and just let them hit the same way every year. You can plan for them to reduce how stressful they feel. So one thing you can do is you can use your slow months as a time to stay visible, reconnect with your past customers, create reasons for people to come back without feeling like you have to slash your prices. A few examples of that is you could use referral credits during slower weeks. So maybe you can offer incentives for your current customers to share your info with a friend. And if that turns into a paying customer, you can give them a small discount or a small like free service, because you'll be making more money from the person they bring in, right? That's the idea. You could do seasonal add-ons just because the major holidays are over. There still are other holidays this time of year that we could use to our advantage. And then in the retail space, you can bundle seasonal products and maybe even use some loyalty incentives. I just want to caution, especially this time of year, try to avoid heavy discounts. Now is not the time to use those to bring more people in. We just want to try to be creative, right? And so another creative thing you can do is try to do monthly memberships or packages. And in the pet industry, you're in a good space for that because a lot of you have repeat customers anyway. So you can try to use that to your advantage and give them an even more reason to come in. Dog daycares use this very frequently. It's very common on their business model to have memberships. But groomers, you are seeing customers frequently too. And if you were to push into a membership, not only would it help you flatten out a little bit of that revenue dip, but it's going to make things easier on the pets because they're getting that monthly maintenance on a recurring schedule. And that's less matting, less trouble with their coats, stuff like that. And then retail, again, loyalty programs or maybe seasonal box of your best sellers, anything like that to just make people want to come in every single month to see you. And then finally, one of the best things you can do to make it less stressful is to build a small savings buffer. And I know that's easier said than done, right? So one of my favorite ways is to start by, getting really clear on your baseline. And what I mean by that is you're going to look at your revenue by month again. But this time go to the past 6 months and you're going to look for the month that was the lowest out of those 6 months. And that number is going to become your baseline. And you're going to plan your core expenses, like everything you absolutely need to keep your business running needs to fit within that baseline. And I know you might look at your number and think, okay, there's no way I can make all my expenses fit in that number. And that's okay. There's a few things we can do here. So just keep in mind, this is just information. It's not a failure. We can fix it, right? So you can look at where you're spending your money and adjust it seasonally. So supplies, we can lower ordering supplies if you're not as busy because essentially you shouldn't need as much. So you can lower that supply amount. Again, payroll, try to align staffing with what's actually going on. If you're not as busy, you shouldn't need as much coverage. And then this one's a little bit harder, but look at the nice to haves, the things that you don't really 100% need. And you don't have to cut them out permanently, but you could lower them or just pause them until things stabilize a little bit more. And then What you can do is once you've built your budget around your baseline, make sure you include pay for yourself in this too, because that's important. And then when there are months where you go higher than that baseline, what you can do with the extra money is you take 50% of that, give it to yourself, and then the other 50%, keep it in the business. And this is what's going to start building your buffer. So you'll use this as your savings buffer. You'll use it for future opportunities, covering slow months, saving for taxes, just anything you might need it for. It's going to be sitting in the bank account for. I know it sucks. I know it's not fun, but it's one of the best things you can do for your business. But overall, the takeaway here is we can't eliminate slow months completely, but we can make them feel less stressful and more planned for.
You mentioned the buffer, and this is something that I think a lot of people in this room, either currently or in the past, have faced. Tax season is coming, and it's like, where did all the money go that I was supposed to use to pay my taxes? Right? That can feel really scary because I think not, especially when somebody is a brand new business owner, it's not something that they necessarily see coming or are prepared for. So something that experience will teach you. But sometimes, especially with the economic difficulties that we've been facing since last year, since the pandemic, it has created more of a financial crunch, right? Where it's like, how do you balance having a buffer, not just, to save for taxes, but for savings for the business when an emergency happens? And then how do you also, plan accordingly based on, the seasonality that you just talked about? How do you leverage those really peak busy times to help you create those buffers and savings, right? So that when things are slow, you're not stressing, right? About, oh my gosh, I owe this massive tax bill in 3 months from now. I'm just curious if anyone can drop in the chat. Are you nervous about your upcoming taxes? If you can say yes in the chat, while I also bring up another point, I just want to see if anyone is nervous about it. And the other thing that you touched on a lot of really great practices for brick and mortars. We have several doggy daycares in the room, actually. I'm curious because I noticed in the chat, we also have some service providers like pet sitters and dog walkers and home care for pets, those types of businesses that don't have a physical location, right? So I'm wondering if we can go into perhaps, what are maybe some tips and tricks for those kinds of businesses. And before we do that, I think it seems pretty consistent for the most part. We got a lot of yeses about nervousness for tax season. Melanie, I'm so proud of you. That's fantastic and outstanding planning. It helps you avoid that stress. And hopefully after today's session, a lot of us are going to start planning going forward with the insights that Virginia is sharing, making it a lot easier, right? So going back to my question, or about those people in the room who are service providers, they don't have a brick and mortar. What would you tell them?
Yeah, so it would be very similar to what the daycares do, even though people aren't coming in. You, with the sitters and the walkers, you're probably seeing your clients frequently, and you can try to get them on a walk membership where, they choose between 2, 3, or 5 walks a week, and price it accordingly. I actually, a long time ago, I don't know if this would be helpful, but I created a calculator to kind of help you decide what to charge for your memberships and different incentives that you can use. And I can definitely share that after this if you guys want. But you input your price that you normally charge for walks in there. And I have tabs for different types of businesses. So this would help anybody in this room probably. But you put how much you normally charge, because again, as I said before, I don't like discounts. We're not doing that here. And then it'll calculate how much your membership should be per month. And it even gives you an option. Another thing you can do is if people are like, I can't afford all of that at once a month, you can offer weekly payments. So it's not so hard up front, but you still get the cash flow weekly. They don't have to pay as much up front. So it gives you the weekly and the monthly option and tells you how much to charge, and then gives you ideas of bonuses to give them instead of discounts. So, but yeah.
That makes a ton of sense. So I think when we consider things like memberships or just general clean financial practices and behaviors, what do you think pet business owners should be checking regularly, just so they have a better idea of understanding sort of where they stand financially and kind of how to keep track of all those finances over time?
Yeah. So I know this is probably the part where a lot of people expect things to get complicated. People tend to avoid it, but it really doesn't need to be. So for most businesses, monthly check-ins are enough. You don't need to look at this every single day. But very basic first thing you want to look at every month is your profit and loss. After you get everything organized, you'll have a report that tells you what came in, this, basically your revenue, what went out, which is your expenses, and what's left, which is your profit. And then when you're looking at that, you can ask yourself, is anything different than I thought it should be this month? And then from there, you can move on to the balance sheet. And I think this one's the most intimidating one, and most people probably don't look at it. But it's really just a snapshot of what's going on in your business. So I'm going to drop a few accounting words, but don't worry, it's okay. The first one is assets. So this is basically what your business owns, and then liabilities, which is what your business owes, and then equity, what you as the business owner has put in and taken out of the business. And it basically just helps you understand the overall position of your business and not just the activity that happened that month. And then finally, this is the one that most people don't even think about, but it's the statement of cash flows. So it's a report that ties the other two that I talked about together, and it helps you. One thing about it is you have to remember that profit is not the same as cash flow. So you could look at your profit and loss and see that you made a certain amount of profit. And then if you think to yourself, well, that is not at all what hit my bank account. The statement of cash flows is what's going to tell you why that number is different. So it's going to show you things like the loan and credit card payments, timing differences between your point of sale software and when the money actually hits your bank, money that you took out of the business. It just explains where the cash actually went and how much you have left over after everything. Everything is paid. And this is what helps you decide if you can afford to, take on a new expense, or if you need to wait and make adjustments first. And I mean new expenses like hiring somebody new, big investments, stuff like that. But when you start thinking about your numbers as data, which is basically just useful information to help you make decisions, they do become a little bit less intimidating.
I think as a business owner, we have to fall in love with at least some of the data, right? And I think as well for some of the pet business owners in here, like say you take a retailer, for example, the benefits of having a point of sale system can really help you with some of these reports. But I wonder if you have any other kind of ideas or tips or thoughts around pet business owners that don't necessarily have the benefit of a point of sale system, right? Take a sitter or a walker, like someone that just provides services without something that's so cut and dry as like a scan the barcode and swipe the credit card type business. Do you know what I mean?
Yeah. So a lot of the pet sitters and dog walkers and like not actual retail businesses do have some sort of software where they're collecting money. I've noticed a lot of them use like Square. Time to Pet is very common in the pet sitting space. So there's normally some sort of report to help. But if you're not using any software at all, that's when, good tracking is going to help, because you're going to want to track everything that's coming in to your bank account. But yeah.
It starts with some kind of tracking system and
Yeah.
software. So
Yeah.
when you talk about like tracking things regularly, or at least like be checking these things regularly, what do business owners, or what should they be looking for in terms of like a red flag, or what kinds of metrics are signaling maybe a problem instead of just like normal ups and downs or seasonality or things like that?
So there are definitely a few ways to spot these signals. And I know benchmarking your business against other businesses that are similar to yours is really helpful, and a lot of people want to do that. But your own business history can be just as important. So a few helpful comparisons to look at is you want to look at this month compared to last month. So If you're looking at the reports side by side, did anything change unexpectedly? Did an expense jump randomly without a clear reason why? And then you also want to look at this year compared to last year. And again, did any expenses rise super dramatically? Like when I notice that a client's expenses are getting really high or their profits are shrinking, I'm going to pull a report that shows me this year compared to last year as a percentage. And I'm going to go down by line, and any line that like went up 10% or more, I'm digging into that. And I'm like, why? Why did this raise so much? What's going on? And then on top of that, year over year revenue growth. So there's no specific benchmark here. It just depends on your goals, and really any growth is great. But you want to look at that. And then alongside that, year over year profit growth. So what I like to look for here is if revenue is growing, but profit isn't, or if profit is growing significantly slower than revenue, this could signal overspending or pricing problems. And then outside of that, there are also a few other metrics that we like to look at. And one of them is revenue per service or product. So if you offer multiple different things in your business, like if you have a retail store, but you also offer grooming, you want to see those separately. How much is each one bringing in? And this is going to help you break it out and see out of everything you sell, what's performing the best. And then if you're in like a service-based business, revenue per pet or visit is also very helpful. So this one really helps with pricing decisions. And it's really easy to get the answer to this one. So you just kind of look at your monthly revenue, figure out how many dogs you saw that month, and then divide your revenue by that many pets. And then if you want to play with price increases, it's very easy to be like, okay, I want to raise my prices $5 per service. I see 100 dogs per month. That would only raise me $500 per month. Is that worth it? Or do we need to go higher? So it just kind of helps you break down the math a little bit more and see the impact of those pricing changes. And I mentioned labor before. Labor is a big one. You want to look at labor as a percentage of revenue. So to do that, you'll take your labor expense, and this is like everything, what you pay for payroll, the taxes, any benefits, that total payroll cost, and you're going to divide that by your revenue, multiply it by 100 to get the percentage. You don't want that going over 35%. A lot of times I see it creeping closer to that 50% mark, and that's when we start seeing the profit squeezing and getting really hard to get profit in your business. And then cost of goods sold as a percentage of revenue for retail. You want to look at that as well. And this helps a lot more if you are breaking it out by revenue, so you can see how much you're paying for the cost of goods sold versus the actual retail sales. And then also profit margins. So we want to look at your profit margins. That's how much profit you kept compared to how much revenue you brought in. And so just keep in mind, so if you have a 25% profit margin, that means that you keep 25 cents of every dollar you bring in. So that helps you understand the percentage of everything you bring in, and it also helps you with pricing decisions. So if you're deciding on a price for something and you're like, well, typically I keep 25% of that, is this going to cover everything? And then for retail, some more, we have days of inventory on hand, which kind of helps you understand how fast that inventory is moving and let you know if it's going too slow. And then also inventory turnover just helps you understand how many times per year you sell through your inventory. But just keep in mind, when you're looking at all of these, one-off months doesn't mean there's a problem. It's just patterns that help you understand if there's a real thing going on. But yeah, all of those help you see a real big story of what's going on.
A lot of different percentages and metrics there to keep track of.
Yeah.
I think for like a retail store specifically, typically it's fairly straightforward when a lot of owners are like, okay, I know that the goods that I'm bringing in, I'm going to mark up this much, right? And so you have an idea of how much, revenue you're making based on your own markup, right? But for service providers, it is a little bit more complicated. You have to take into consideration not just the supplies, but the labor and everything else that runs into that, the amount of time, like the capacity, how much of this you can actually do. And all of that goes into a much more complex kind of configuration. So it's important to stay on top of all of these metrics if a lot of these people not necessarily have done that on a regular kind of basis.
Mm-hmm.
So I know that we've got tax season coming up, which has definitely been front of mind for me, right? What do you think are some of the most important things for pet business owners to focus on now to avoid having some stress or unwanted surprises come, February and March?
Mm-hmm. Yeah, so I know that we're already in the thick of tax season, but there are still a lot of things you can do right now to lower your tax bill and stress. So first and foremost, get your bookkeeping up to date. So you want to make sure all your income and expenses are categorized. This is the foundation for capturing all your eligible deductions, avoid missing anything that you paid for, and giving your tax preparer accurate, usable information. And this is where planning ahead really starts to pay off, because once your books are up to date, you can estimate taxes more accurately too if you're keeping up with this throughout the year. I know it's a little too late for last year, but starting this year, a good rule of thumb for many businesses is to set aside 20 to 30% of your profit just for taxes. So that way, you have that money to pay your taxes if you're not paying those quarterly taxes. And that's where that savings buffer I talked about earlier comes into play and makes it really helpful. But if you still need to get 2025 organized, that's okay. Starting now still makes a difference. And then also, if things aren't ready yet, filing an extension can take a lot of pressure off. So it's going to help give you time to clean things up properly. And then also, I'm not sure who all knows this, but if you don't file an extension and taxes are unpaid, the IRS can give you a 5% penalty per month on unpaid taxes. But if you do file an extension, the penalty drops significantly. It goes down to about 0.5%. So it's going to save you money in penalties. Because remember, it's not just 5%, it's 5% per month. So that can add up really fast. So that difference alone can save a huge amount of money while you're getting organized. And then keep in mind, so the deadlines, if you're an S Corp or a partnership, you need to file by March 15th. Any other business is going to be April 15th. Unless it lands on a weekend, I have not looked that up yet. If it's on a weekend, then it's going to be the following Monday. But filing an extension is going to buy you time, about 6 more months of time. And that's a lot. And then next, you want to, this one's really big. You want to review your vendor payments and see if there's anybody that you need to issue a 1099 for. So this one gets really confusing. Even I hate the way the IRS does this. It's like my least favorite part about bookkeeping. But so if you come across like anybody that you are paying for a service, cash, check, Zelle, you might need to issue them a 1099 if you paid them over $600 last year. If you pay them with credit card or debit card, then they'll get a different form issued by that payment processor. But the reason why you have to issue a 1099 is because there's no payment processor to tell the IRS this person was paid. So now you have to tell the IRS they were paid, if that makes sense. And those are due by January 31st. But if you are late, it's better to issue them late than not at all. So keep that in mind. And then if you pay people by credit card moving forward to avoid this, it just makes it a lot easier if possible, debit or credit card. And then finally, you want to gather your tax documents. So collect any documents your tax preparer will need. So again, 1099s that were issued to you, 1099Ks from your payment processors, W-2s if you get them if you're an S Corp. And then also on the topic of W-2s, make sure that your payroll provider is actually issuing those for you. I know that Gusto, they prepare the W-2s, but they won't mail them unless you tell them to. So make sure this is automatically getting done or that you're taking care of it. And then the reports you're going to need after you get everything caught up, at minimum, your tax preparer is going to ask for a profit and loss and a balance sheet, which I talked about earlier. And having those ready is going to make this all a lot smoother and a lot faster. But just, clean current records are the fastest way to make tax season calmer, and it's not too late to start. So just keep that in mind.
Yeah, it sounds like definitely better late than never for all things tax related. So guys, we have gotten a couple of really great questions in the chat. Just want to encourage you, if you do have questions, the chat room is definitely open, and we'll make sure that we have a few minutes at the end here to get to those. So Virginia, something that I've heard you talk about a lot before, you've actually mentioned it earlier today, is things like hiring an employee or paying yourself appropriately. So for those who maybe made a New Year's resolution to themselves, to their business, to do either of those things, what advice would you give to those business owners that are in that spot?
Yeah. So if you're hiring your first employee and you're looking at your profit and cash flow to see how much you have left, see if you're comfortable to hire someone. One thing I like to suggest is take the profit, your average profit, and divide it by 4. And is that enough? Because you don't want to take all of your profit to hire a new employee. So use like 25% of that profit. Is that enough for an employee? Can you cover somebody's wage with that and use the 75% for what you need in your business? That way you're not strapping yourself too thin to bring on somebody else. That's really helpful. And then if you haven't started paying yourself, and you want to, a lot of that comes down to when I mentioned the baseline earlier. Is there anything you've been spending money on that you don't need to be, that you could cut out if you want to start paying yourself more? Or is it just a matter of you have the money, you're just not doing it because you're scared to pay yourself? And that's totally fine. I see that too. And that's just a matter of, looking at what's going on in your business, how much money you have left. And you don't have to pay yourself all of your profit. You could do the 50% that I mentioned before, maybe do 50% for you, keep the other half in your business. That way you're still getting paid. The business still has that buffer. Everybody wins.
I'm curious because that's a pain point for a lot of people when they either start their business or they enter a financial crunch. So I'm wondering who in the room might be facing this kind of challenge right now. We brought it up because we see this question come up all the time. But now that we're, kicking off a new year, who is in the room, if you can drop it in the chat, trying to figure out if how to go about financially, hiring a new employee, or how to financially go about paying themselves, right? Even if you've done it in the past, but now with all the financial crunch, you're just having, you've seen yourself have to downsize in team, or, you're just not able to pay yourself as much. Just want to get a pulse in the chat in case anyone is facing these kinds of challenges. Because as you can see, Virginia is a wealth of resources. She mentioned earlier, Virginia, there's a lot of people who in the chat, they said they would love that calculator that you talked about earlier. So I want to continue picking your brain to see, what else we can cover in the time that we have. And we actually had somebody mention just now in the chat, like, yeah, paying themselves is a priority for this year. So I think that, that resonates. Couple of questions that we've gotten inside the chat. Before we go, everyone, I encourage you to stick around because Virginia is going to share, as promised, her bonus, her cash flow breakthrough. action plan with you, which is customized with a Loom video from Virginia to give you that one step that you can start taking. So make sure you stick around to the end. Just going to get to those questions first that are in the chat. Okay. So first one being from, let's see, from Blanca. And I think this applies to anyone who does any, let's see, actually it was Melanie's question and said that I was thinking applies to anyone. Okay. So let me just read Blanca's question. Any supplies purchased to make cat accessories would be only considered COGS, right? Cost of goods sold. Or do I also write them off as business supplies? That's an interesting discrepancy. Go for it.
Yeah. So you're using the cat supplies and you're selling the cat supplies, right? So if it's something that you buy to resale to a customer, then it's going to be COGS. But if it's something that you use to do the service or it's just supplies you have on hand that's not directly related to reselling, it would be supplies. I hope that helps.
Yeah, and Blanca, if you have a follow-up to that, do let us know. Everyone in the room, this is the time to ask, a financial cash flow tax expert any questions that you might have. And I'm telling you, those questions are going to come up later and you're going to be like, I wish I asked them. Okay. I'm going to go into Melanie's question. This is the one that I think, even though Melanie, you're located in Canada, this happens to any business owner that does something hold on, let me go back. Where was it? Yeah. Her first question earlier, when you do any donations, right? Question for items, for example, pet food, I donate to the food bank. Is that a tax deduction as a donation?
Yes. Mm-hmm.
Yeah.
Yep. Just keep a record of that and mark that out so that way you can get credit for that.
And we may safely assume, that's the same case in Canada. You can check, that in terms of the federal law, but overall in business, something that is a donation, you just have to earmark it correctly in your expenses. And she had a follow-up question. I want to start giving my staff bonus incentives each month when meeting goals. Great idea. How would I figure out how much to give them if they reach the goal?
Yeah. So a lot of times when people do bonuses, it's based off of profit. So you don't want to do like a percentage of like the revenue. It's a percentage of the profit that you bring in from revenue. So if the goals are that you want more revenue, I see a lot of people do like 5% profit as a bonus. Stuff like that. Or you could just have it as a static number. If we reach this much, we'll do a $250 bonus. If we reach this month, we'll do a $500 bonus and just do tiers. Stuff like that helps as well.
I like the example of tiers because even if you look at, you can look to even how, they do it in corporate, right? Corporate structures, the way they do sales incentives and literally just copy off of that. If you guys want to even brainstorm even more into this, I bet you could use ChatGPT, throw in all of your business details and be like, hey, Virginia told me that I could do this tier system based on my numbers. How would you break it down? Right? So that way you don't have to crunch the numbers. But if you want really good sound advice, you want to talk to Virginia more about it. And that's something that obviously she can help you regard in that bonus that she's going to give you at the end, the cash flow breakthrough. So another question that came through, we have a couple of questions. Great. Keep these coming in, guys, because we have about 10 minutes left. So we want to get all the juice and knowledge from Virginia that we can. So Sally asks, if I give a deep discount to the local Humane Society, so basically she is selling goods, but at a deep discount to the local Humane Society, is that counted as a donation, that percentage that she did not charge them for?
It can be, but so you're either going to record it as a discount or as a donation. You're not going to record it as both. So you can decide, do I want to record it as a discount? Because either way, you're still going to get the benefit of the tax deduction. You just got to decide where you want to put it. So either way is fine.
Yeah, and it's, as you mentioned, like it's really important that you are careful about how you label things, right? And don't try to label it twice because that's, I wouldn't say cheating, but it's kind of like duplicating, right? Incorrectly. So you just don't want to land yourself in trouble. And that's why, honestly, every year I have to, I hire an accountant to handle my taxes because I just don't want to. I think most people in this room just aren't. We don't go to school for this. You know what I mean? We are not trained to do this. So you are, and that's why we're here today. So Melanie asks, so she's following up regarding the bonus. Would that, let's say, $250 bonus then be decided by the number of staff? Are you saying, Melanie, divided by the number of staff, maybe, or decided? Which one
Divided.
is it? Huh? Divided. Okay.
Okay. So that's up to you. So depends on how much staff you have and how much money you're willing to spend. You could still do like 250 per person if they're like doing it as a group effort and if you can afford to like give 250 to each person. Or you could decide on one large bonus to divide by everyone. It's totally up to you. But tiers are helpful because it gives them incentive to reach higher to get that higher bonus. And then if you have, that specific amount and you divide it by the staff, it's the same amount no matter how much staff comes on, and you can budget for it and plan for it.
I had a boss prior to my business owner journey. I had a boss that basically said that, when deciding on like how to incentivize or reward staff members, it was not always about like a monetary amount. He specifically said, well, you have to figure out what people want, and if all they want is 2 days off, then you don't have to give them a cash bonus. Or if they would be thrilled to have a pizza party, then you have a pizza party, but you have to understand what's most important to your employees in order to incentivize them and push them appropriately.
Mm-hmm. Yeah.
Okay, we've got another question in the chat from Blanca. Is there a minimum donation amount or any other considerations to write off for charity?
Minimum, no, but one thing to keep in mind when you're doing donations, you can only write them off as a business if it's like an actual nonprofit organization. So if like you're donating to a friend in need, but they don't have like an actual nonprofit donation, that can't be considered a donation. Because sometimes I see like GoFundMe accounts. No, GoFundMe is not a business tax deduction. It has to be an actual nonprofit organization.
I just learned something new because I bet you I'm not the only one who thought that GoFundMe donations qualified as donations as a business. So they don't. That's a very key distinction.
Yep, I see it a lot.
Yeah. How do you catch those? Do you ask for those details from your clients when they say like, I'm writing off $1,000 and they might not say that it's a GoFundMe. So how does that come up?
Well, so like I normally see the transactions because I'm like actually in the books, it comes through the bank and I see GoFundMe and I'm like, okay, no. And then I'll just kind of let them know. But if I see like an actual humane society or something like that, then we'll write it off. But
yeah. Speaking of books, right? We mentioned earlier potential New Year's resolutions that people in the room might have in terms of, either hiring new staff or paying themselves. One that I see that comes up is cleaning up their books, right? Especially because tax season is coming up. So can you share a little bit about that process and especially like what working with someone like you can help, what kind of pressure that can help lift off of them, right? Especially if they're not a finance guru.
Yeah, definitely. So, this time of year, we're helping a lot of people, new clients, current clients. We're just going back historically with QuickBooks. So either they've gone in QuickBooks and tried to do it themselves and it just didn't work out the way they thought. Sometimes we actually have them who worked with other bookkeepers and they didn't do a very good job and they bring somebody else in to clean it up, or just nothing's been done at all. So there's a lot of different scenarios. We're not afraid of any of them. We've seen it all. But so we'll just kind of go in, make sure everything that hit your bank account is being accounted for. Everything's categorized the right way. Sometimes it can be confusing if you have like point of sale or different payment processors, you have to make sure you're breaking everything out correctly to include sales tax, fees, everything needs to be broken out properly. And stuff like that. And we're just catching all of those things, making sure everything's where it needs to be. And then we put it all in this nice little report that all you have to do is hand it off to your tax preparer and they use that to file your taxes. So super quick and easy. We do all of the investigative work and stuff like that and make sure everything's where the tax preparer likes to see it.
And Diane asks, where would you suggest starting if you are seriously behind with your books, asking for a friend? I feel Diane.
Yeah, so you can tell your friends that just start with a software. QuickBooks is really helpful because you can connect your bank account in there. It's going to pull in all those transactions, and then you just have to put them in the category to where it makes sense. If you really don't want to do that, if you don't want to go line by line, or if you're very confused on how that works, we can definitely help. We have a bunch of different options for that. But yeah, it's just a matter of going back from January, so a year from now, and remembering what you purchased and putting it where it needs to go.
Yeah, and it's definitely easier said than done on your own, for sure. Melanie did agree with you about QuickBooks Online is her saving grace. So that's awesome. Okay, last question that we're taking before we wrap this up. We'll make sure everybody gets the bonus. Sally asked, speaking of nonprofits before, how often should I get their updated nonprofit certification? Is that even a necessity, right?
So I don't normally deal with that very often. If that's something that you need to do, I'm not even sure how often they fill them out. I would guess every year or every couple years at least to make sure it's current, if that's something that you need to make sure that they're staying up with it.
Awesome. All right. So I just want to bring up on the screen. We're sharing. Okay, awesome. I want everybody in the room to go ahead, use their phone either to scan this QR code or grab the link that we're about to drop inside the chat. Because this is what's going to help you get your cash flow breakthrough action plan. And the way it's going to work is Virginia is going to review the information that you give and then send you a customized Loom video. Loom is just a video recording service, right? That is going to give you your next immediate step to help you improve your cash flow for 2026 in preparation for the upcoming tax season. So you can go ahead, either grab your phone, scan this QR code, or grab it from inside of the chat. Virginia, I just want to thank you so much for spending this time with us. It has been definitely much needed. This is what we need to hear, the hard truth about what we need to be doing, what we need to start doing, some things we need to stop doing, right? Start fresh for 2026. Any other words that before we close out today's session that you want to leave everybody with?
No, I just thank you all for having me. It's been great. I hope you all found this helpful. And then if you have any questions, feel free to reach out to me. I'm happy to help anytime.
Absolutely. Thank you again, Virginia. And as we mentioned earlier, this session has been brought to you by the Pet Industry Network. We love to have one of our featured guests and experts join us every month to share their expertise so that you can gain the insights that you need to help you grow your business. And we have something exciting in the works. Our very next 2026 PIN Growth Summit. We have a date, but we haven't released it yet. So if you want to be the first to know, make sure you grab that link in the chat, because I'm telling you, oh my gosh, we've been doing it for 2 years already. So the third time is going to be even even more amazing. You don't want to miss it. If anyone is here who doesn't know what the Pin Growth Summit is basically our multi-day virtual conference where you get to hear from all of our experts and actually work together, right? Get one-on-one support in your business and walk away with, all, not just the strategies, but actually the how-tos, how you're going to execute and implement, and, all the support that you need to make it happen. So we're very, very, very excited. Sally mentioned it's a suspicious link. Let me see. Yeah, Zoom is being funky about that, but I trust us. I'm going to click on visit. It works for me, Sally. So thank you for bringing that up. Well, don't worry, we're not trying to spam you guys. This is a true link. So yeah, just again, thank you everyone so much for joining us today. It's been such a pleasure kicking off the new year with you. And thanks again, Virginia, for leading today's session.
Thank you.